Welcome to the weekly roundup, July 7th, 2023. I'm Scott, that's Ben. On another shortened week, right? Was this a shortened week?
This was the shortened
Yeah,
week.
it was.
Yes, it was. Yeah.
It was a shortened week for Canadians, and it was 4th of July for Americans. So it was really quite quiet in the markets.
It was, certainly was. Today, I like these days. 7/7/23. July 7th, 7/7.
Ooh, I like that too.
Yeah, it was a shortened week. Canada was very quiet on Monday, but the US markets were quiet on Monday as well. Volumes were down kind of 40-50% over kind of all time frames on Monday. And then of course Tuesday was closed for the US. But all the talk this week was about the jobs number in the US. So that's where all the economic attention got.
And I can also confirm it's pretty much a ghost town inside of our office here. So we're, hey, if you're on this and you're seeing us, you got the right advisors because we're in the office when nobody else is working for you, right?
Well, that's true. That's
Shameless
true.
plug.
Very true.
Shameless
Very
plug.
true.
All right. So what else happened on this kind of slow going week in the markets?
Yeah, the biggest one was the jobs. We'll say the jobs beat. I guess that was yesterday. So I did again, if people are following on YouTube or LinkedIn or such, I'm doing updates on the charts. Usually they're actually different charts of the day than the ones I put into the daily, with just a little bit of context around what's going on. But the jobs number came out yesterday. Consensus was something in the neighborhood of 250,000 additions in the US, and that came in at 497,000, I believe. But effectively, if we look at this, I've mentioned this to clients that I've spoken with, and maybe I've mentioned it on here, but I'm not sure, is that in the US, they count every job as a job. So whether it's 1 hour a week or 10 hours a week, one person could have 5 jobs, but only is one full-time salary, that counts as 5 jobs. So you had a big amount of double counting with jobs. If you look at the underlying there, 452,000 of those jobs were part-time jobs. Also, there's something called the ERC, which is a grant that restaurants and leisure hospitality companies get for keeping employees hired. If you look through a lot of that, there is a significant amount of fraud that's happening in that space as well. So the US government's trying to rein that in, but you had a really skewed out number on the beat. And if you look at the revisions from the past month, it was about 110,000 less jobs than they actually showed last month. So I'd expect to get a pretty big revision next month as well. But that got the attention of the markets. Long-winded answer to your question, though, is the markets reacted with stocks down, bonds down on that news, and a little bit of a kind of sideways, choppy-ish day today. But generally, that was what grabbed most of the attention. And if you look at the FinTwit, if you follow any of that, most of the talk's been about the jobs numbers.
Gotcha.
Yep.
And I guess on an internal note, we had our webinar, Role of the Executor. Went quite well. So if anybody that didn't see that, you may have already seen, we sent out the recording for the link, and if you haven't seen that, let us know and we can send it on to you.
Yeah, on top of that, the link's good. There is a checklist, so if you're interested in that, certainly we can send that along as well. It really is it was a great presentation. Jackie did a great job of really explaining the role and answering some of those questions that we get all the time, which is, what if my executor lives in the United States? What should I do? What if what if we own property in Quebec, but we also live in Ontario? Do we need a second will? If we have a company, do we need a will? So tons of information in there. So I'd highly recommend it.
Yeah, definitely.
Yeah.
Okay, you ready to get to the charts?
Absolutely.
Your favorite part of the show?
By far. just gonna share it up here.
Yeah. It's nice of you.
Let me know if you can see it.
Yep. Oh, Christmas tree. All right. Yeah, we're good.
Good. Well, look, I always like to look at a lot of different things, as you know, and that's one of the things that I think is a really good gauge for the health of the economy is how's the banking system doing, how's lending going. Josh Steiner, who works with Hedgeye, is one of the best that I've found to do a deep dive on what's happening in the financial sector. And so this is a look at U.S. financial sector, and so certainly if we look at Canada, it's a little bit different, but directionally it's the same. And so if we look at this here, we get the year-over-year change on the top one, week-over-week change, and then the analysis on the right-hand side. But one of the things that I think was most prominent when we look on a year-over-year basis, what has happened to pretty much every metric on this sheet is, loans and leases and bank credit slowed, commercial industrial loans, real estate loans, revolving credit slowed, construction slowed, multifamily, non-farm, all consumer loans, effectively everything across the banking metric went red. There's a couple of green spots there that are slightly brighter. But for the most part, lending slowed at an extremely quick pace, and that continues to happen. So, as we look at this, it's important to think about what that's going to mean and what that means in the overall economy. So thought this was a great chart, just look at it visually, see what it looks like. I'd say the next one is ISM manufacturing. And so I've put this up many times, and unfortunately I have to keep discussing it because we continue to sit in this place. And so ISM manufacturing gives you a gauge, historically at least it has, for what's happening in the economy. And so if we look at where we are today, we sit at, if you remember this line along here, along the 50, that's the advancing declining line, so to speak. If you're above 50, the economy is expanding, that's GDP growth. If you're below that line, the economy is contracting, obviously recessionary data. So we sit at 46 right now on this level, one of the lowest levels that we've seen in a long time. So the last time we were at this level, the economy was in a recession. So unfortunately, obviously, you don't know that until you look backwards, but the data is telling you something. And you saw the slide before, you see what this is saying. These are all telling you the similar types of things. And so from a positioning perspective, it means the same thing to me when I'm thinking about what do I do now? Do I make changes? Do I stay with my positioning? And generally, I would say my view is still of such. You want to own quality, particularly in the bond space. You want to move away from, if you have any junk or high yield, and out of corporates into governments and high quality at this point. So bankruptcy filings, which I've talked about before as well. As we look at this again, historically, we look at the dark gray bars here, which is the past recessions, at least the past two major recessions. We've had other recessionary periods, but these are the last two major ones. As we creep up here quite quickly, no shocker to anybody, I would think, because rates have skyrocketed. And so, of course, that increases the corporate bankruptcy filings. Couple more, and so again, tightening cycles. So lots of questions still about when do things happen, like how long does it take for this tightening to have a meaningful impact. Again, so if we look historically, this is the same both in Canada and the US. We're 15 months into this hiking cycle. Historically, you see this have a material impact in growth, 14 to 16 months, at least over the last 50 years, that's been the case. And so when the question comes is how much more are they going to raise rates? I think even if they do, it's a tiny incremental change that causes quite a bit of instability and something to break. And so this is historically where we are. So nothing really changes in my view. I think there's lots of upside for bonds. I know I've put this up in the past, but I think it's a worthwhile reminder as I continue to have questions with people. I had a conversation with a client this week just about the bonds in the portfolio. You know, when you buy a bond, if you buy it at a face value, effectively you buy it at $100. If the coupon is 5%, you're going to get your 100 plus 5% every year until that bond matures. But what's going to happen to that bond along the life cycle is, say you buy it at 100 and rates go up, your bond's going to go down in value. Maybe it's worth $90. If rates go down, maybe it's worth $110. And over that life cycle, you get this continued teeter-totter of rates moving as that bond price moves with rates. So, you know, I think that something to remember is that you own bonds, they are going to fluctuate in value, but ultimately they mature at face value. And this is a good visual to say this is what happens as rates change, prices change, but ultimately you're going to get your money back at face value. And if rates go in the right direction for us here, which I think they will, you could make a capital gain on your bonds as well. So I'd say two more quick ones. This is on rates. I've put this up here before. And this is just a view at, you know, the market is heavily short bonds. And so this is non-commercial traders. They're heavily short the bond market again. And so this, we look at the positioning at the 10-year, the 2-year, and the 5-year. So you get big short positions. And so, you know, if you get a big jobs revision or you get a surprise where the central bank talks about not raising rates, you have this huge kind of balloon underwater type feeling where, you know, as momentum goes in the other direction, you could get a 50, 60, 70 basis point move in bonds overnight, which is a 4 or 5% move depending along the curve you are. And so huge short positioning, that hasn't changed. You continue to watch that quite closely. And the last one, which didn't come out on a video format, but you know, I want to comment on, is continue to have questions about crypto and where it fits in and does it fit in. And so if you followed it, we've talked about it a little bit, but not as much lately, as there's been a lot of pressure from the SEC in the US just about what's going to happen with any approvals for ETFs. And so this ongoing attack, I guess, from the SEC on Coinbase and other crypto providers. So the biggest asset manager in the world, BlackRock, they filed for a spot ETF a week and a half ago. And so just to give you context for who BlackRock is, they manage something in the neighborhood of $8.6 trillion, so biggest asset manager in the world. And so they filed with the SEC. The SEC rejected it, and then they came back and they said, you need to show who the surveillance counterparty is for this. So they did that, and who that was, it was Coinbase. And so you had all of the other providers, Fidelity, VanEck, anyone else that has filed an ETF also came back and said Coinbase is the supervisory. Then we had this week, we had Larry Fink, who's the CEO of BlackRock, come on to Fox and CNBC. And effectively what this video is, which we'll send along when we can, is he says, you know, Bitcoin is an asset class that everybody should own. It's similar to gold. It's a global asset class that effectively gives you the ability to convert into any currency at any point. So really the evolution continues. The largest asset manager in the world saying you should own this in portfolios. Why that's relevant is flows really matter for where asset prices goes. And I thought that was an interesting call out that we haven't seen in a very long time in the space.
Okay, great job.
Yeah, beauty.
All right, so what are we looking at for next week?
Yeah, so we had the kind of the shortened week. Volumes were quite light. So next week we get quite a bit of data coming out around the world. So we'll continue to watch that, watch what central banks are doing. But I'd say generally the economic data continues to slow and inflation continues to slow. And so we'll see if that has an impact on what central banks do and talk about. Yeah, I think as I look around the world and I look around the stocks that we're looking at, a lot of these things are, you know, I think if we look 18 to 24 months from now, look quite attractive, and it's really with this kind of negative overhang that's happening in the world. So I'd be quite anxious to say, how do we pivot and maybe get a bit more aggressive, but I need a few things to fall into place first before I do that.
Gotcha.
Yep.
Is the heat gonna break this weekend or what? Or are we gonna be in
Oh.
for a sweaty one?
I hope not. I love this.
I know you love that heat. Eh?
Yes.
Ben went running in like the 40-degree weather the other day at lunchtime. So
Yes. Yes.
he's an animal.
Mhm.
Okay, well, if that's it, we'll see everybody next week.
Think so. Sounds
Have a great
good. Have a good
weekend.
weekend, everybody. Take care.
Bye.